Hello, this is the chart profit video, Friday 6th of July. Looking here at the pre-open, the E-mini S&P. You can see for the last 2 weeks the E-mini has been oscillating around this major controlling price at 27.18 down here. Yesterday's session found its low at that level. As a clue, read the next directional move. I'm looking for aggressive buying or green being marked above 27.18 or aggressive selling red being marked below that level on the current half hourly chart. Here's yesterday's low in that session, currently printing up around 27.45. You'll see from the pulse chart the last time I marked significant selling was back over here in April. From there it's been green up to this point and significant buying from there. We've had quite a period here where no directional imbalances have been marked at all. Pulse chart is somewhat deteriorated, but we've seen no effective selling yet, and with the E-mini printing above 27.18, I'm looking for rather optimistic that we'll see the pulse chart actually picking up and we'll see some green coming in down here as well. Not confirmed as of yet. Just taking you quickly through the sentiment indicators. One in particular is of interest this week, but this is the RIDEX ratio that I follow. Yesterday's level was at 20.47. Here, this is the peak back in late January at 27.55. That's the highest ratio in the database. Anything approaching that and the market starts to look overheated. I think the public poll is telling us anything too significant right now, so that's pretty neutral. Bulls were slightly lower this week, 27.9%. Bears were also lower, 39.3%. I noted a week ago that the net, that's the bulls minus the bears, at minus 12.4. That represented a 1 week fall at that point, a week ago, of a negative 24.9. That was quite a change, and that was the largest single weekly fall, that change being the fall in net since the week ending 17th of November. So the last couple of weeks we've seen more bears than bulls. So an increase in bearish sentiment in the public poll. Nothing too significant, but we noted it. But this is the interesting one this week. Significant outflow again reported by Lipper US fund flows. They reported equity funds, including ETF outflows, the week to the 4th of July of a negative $8.3 billion. So we've had, I think, 5 consecutive weeks of outflows, which is kind of indication of sentiment on its own. We had a bigger outflow this week than we did 5 weeks ago, sorry. So that 4-week flow has fallen significantly. It now stands at 39.3 billion over 4 weeks. And this arrow here shows you the black line, which is the 4-week flow. And actually, this is the interesting bit. I've got a database which goes back to 2003 on these numbers. I'm pretty sure that's the lowest 4-week flow. You usually associate that kind of action, that kind of reading, with significant market lows. In fact, we didn't approach that kind of number. Obviously, that's the lowest in the database. So this is a significant reading in our sentiment indicators here, and I would suggest that on its own this reading is pretty bullish. Obviously we have possibility of trade wars escalating and spooking the market, as it's obviously done here. There's always something to worry about, and this recent fear has looked to have added quite significantly to the wall of worry. Let's finish with a look at the important charts and where they sit relative to their important levels. This is the spider, attempting to rally at the end of the week here. We're less than an hour into the trading day. This is the important level for me on the spider currently, 271.70. That's the 18-month controlling price. And from here, let's hope that the spider can hold this level. Best reference level on IWM, the Russell 2000 ETF, is way down here, the 1 year at 153.50. But you can see clearly on the chart that the Russell 2000, the small caps, are certainly the leader at the moment, possibly along with the technology sector. This could turn out to be a higher low, well above its controlling price. UK FTSE 100, we have the pound rallying a bit today against the dollar. UK large cap index struggling a little bit at the end of this week. Still remains below its 3-month up here, and Consolidating below that level, resistance here and here. Price back up here for the FTSE would put it in a stronger position. German DAX index, the important level here is the 2-year controlling price right here. We've seen more or less support at that level. Price below that would be an indication of weakness. You can see generally how the FTSE and the DAX, as representing the European charts, generally well underperforming the US charts that we just looked at. Talked about recent videos. We've talked about these important levels on the T-bond TLT chart. This one particularly, the major at 121. In early June we saw support here at 118.50, the 6th month, and we now look to have broken out. In fact, we've broken out to its highest level at the start, right back over here at the start of the year. The level of resistance now is off this high to this low, the halfway point, which is this dotted line here, which actually we've just hit. Comes in just below 123. Price above that, TLT, which already looks like a pretty strong chart, would be back in a really strong price location. There's a number of reasons why gold, I'm looking at GLD, the gold ETF, there's a number of reasons why gold could well bounce back here after this decline. I'm talking about the seasonal pattern, which makes a low around here, rallies almost through the end of the year. A number of sentiment indicators. Gold is very correlated to the yen. The yen has not declined as gold has done here, so there's a positive divergence. And I would say the commitments data as well is supportive, but they're all good reasons why gold could turn around here. I'd be much happier to see GLD back above 121, the major. Price is the most important indicator. Looks like there's some weakness for the dollar coming in, which we'll discuss in a moment, and you'd certainly want to see gold responding in a positive fashion. So here is the dollar index. Just to recap, the major, as we know, moved to 89.54 about this point here. We immediately saw the dollar index begin to rally. On a 30-minute basis, the 6-year controlling price is at this level here, which is 94.80. Now, is this a false breakout here above that level? Just consolidated a little bit, but the fact is we're back underneath it on the low for the week. The index got overbought at this point. This may be just relieving that situation. But we did not see the higher low that we talked about on any time frame above that level, and here we are back underneath it. So we need to bear this in mind. And interestingly, at the same point, Euro FX chart, if we look at the 1-year resistance at 117.55, printing exactly at that level as I record this. Price above that level and printing time would increase the odds of a rally for the euro. Here would be a negative for the dollar. Finally, I would look at the pound. The big reference level here is 131.70. That's the major. We have probed into it. We have not seen a lower high below that level. Pound is printing back above it. Back to the Euro FX chart. This would be a key chart for us next week in the pre-open, where this chart sits relative to 117.55. We're going to see the dollar dip a little bit here. Okay, that concludes, and once again, I thank you for watching.